I expect a 30 GSR gold silver ratio. So if gold makes it to 3,000, then silver should make it to 100. Most people think that that's, pie in the sky fantasy, but a 30 GSR is not crazy talk. We had a 17 GSR in 1980.
Welcome to Gold Silver Pros.
Hey everybody, this is 𝘎𝘾𝙀𝘆 with �GoldSilverPros.com, and I have a returning guest of the program. It is Don Durrett from GoldStockData.com, and Don and I met on Seeking Alpha years and years ago, and he's been to my conferences, and we haven't had him on in the longest time, and I thought this would be a great time to welcome him back to the program. Don, how are you doing today?
It's good to see you, Rob. I know we're both big gold bulls, silver bulls, so good to talk to you.
Yeah, we definitely are. And, your site, just to talk about this a little bit up front, one of the great things about your site is if you're doing research on the gold and silver mining sector, Gold Stock Data is really the place to go, because you do reviews on just an enormous amount of stocks, and you have information about what they're carrying, what their resources are, who their management team is, and you do reviews at least once a year on a lot of these. It's just chock full of information. So if you guys are interested in shortening your learning curve on the mining stocks, I fully recommend Gold Stock Data. I've taken the data off of your site, Don, and written articles off of it for Seeking Alpha and picking mining stocks and talking about mining stocks. It really is a great site. So I just want to thank you for putting it together.
Yeah, thanks. I created it because there wasn't any data, for these miners on the internet. And there still isn't. I mean, my database is really the only one, I think. It's somewhat comprehensive. So, that's what I do full time. I maintain the database. So I'm constantly analyzing stocks. And so, so the thing that's great about my site is it's a combination of data and analysis. So I do my own 2-3 paragraph analysis of every company. And you get that consistency across companies. So you read my analysis of one company, you kind of get how I do it, and then you go to another one. And so it makes it really, really easy to research companies.
Yeah, and that's really important, because in my early days, about 10, 12 years ago, when I really started getting into the mining stocks, man, finding information, you had to go through their 10Ks, you had to go through interviews, if they had them. A lot of these stocks, Don, if they don't come on my channel or somebody's channel, they're not doing some sort of media, it's really hard. I mean, they're all good about putting up a website, but really you want to go past that. You want more information. And I have been blessed over the years to have the opportunity to do some of these mining tours and talk with geologists and metallurgists. And that helps to understand the industry in general.
Yeah.
But there's really no, it's a lot of legwork to go and find out about these companies. And you do a lot of that for people. And you're right, there is no other place for you to go get it. So I do appreciate you doing that. I wanted to ask you, we're getting into the summer. A lot of times we have the summer fade. I wrote an article recently on this. 2 of the past 5 years, we've actually had a nice boost in gold during the summer because of the pandemic and some other concerns, a couple of years ago with China and sanctions. But generally, gold and silver tend to fade a little bit during the summer. Is that what you expect is going to happen this time, or you think it may be a little bit different given the macro situation?
I actually think it's well, I thought that June was going to be fairly, benign for gold and silver. The markets are doing fairly well. Didn't expect any crash here. So June, there's not a lot is going to happen. And sure enough, we faded. Yesterday, the 𝘎𝑃𝑆 went down quite a bit. We're down to the 𝘎𝑃𝑆 is at 233. I mean, I consider 250 the neutral line. So anything, close to 250, we're kind of neutral. Below that, we're negative. And so 230, 220 is very negative. These stocks are really, really cheap. I don't know when they're going to bounce. I think that, what I've been saying over and over again is that until the stock market rolls over and admits basically that we're going to have a recession, not this no landing, soft landing idea, you will start to see the S&P roll over. And AI gave it a little bump here. I thought that, in March, April, that we were going to get this final sell-off in the S&P, which is what we need to, finally wash out basically these headwinds against gold and silver and against the miners. As long as people are putting their money in the stock market, they don't really want anything to do with gold. They only really want to go into gold when they have to go into gold. And so right now they don't have that fear level. So me, I've always said the number one driver in gold is the fear trade.
Mm-hmm.
You got to have the big money. Gold is a big market. You have to have the big money move the market. And they're only going to move the market when they have to buy gold. And so we wait. I mean, so we've had it'll be a 3-year correction in August for gold. I mean, it's been a really long correction. Some people have called it a bear market. I've called it just a correction because we haven't taken out where we broke out from.
Right.
So I just see it as a long, long correction, which has been very, very painful. And so we wait. So you asked me, when is this going to happen? When is it going to break out? I actually think it could break out as early as July, because the market here, everybody is really bullish that the market is just going to keep going higher and higher.
Mm-hmm.
But we're seeing this week that the market's, having a little trouble here getting higher than, it's last week's highs. And, I am not expecting to see, say, 4,800 this year at all. I mean, 4,500 is a possibility, but I think we're in this final rally, this kind of topping. And if it doesn't get back to its all-time high, it's going to roll over. So it's like, yeah, show the S&P. I mean, when is it going to, going to roll over? So I think it could roll over as early as July, but probably not. I'm looking at August, September as being really the 2 months when I expect the markets to roll over. It could go further. I mean, it could go October, November, but I think the BRICS conference in August,
Mm-hmm.
if they announce a new currency, I think they will. They've set up the banking system. They're basically there's been a lot in the news recently
Mm-hmm.
how they're replacing SWIFT,
Mm-hmm.
and it's a combination of Iran and Hong Kong. Those two places are basically working together to replace SWIFT. But what they haven't replaced is a currency to go with that new system.
Mm-hmm.
I think that's coming in August, and I think that is going to really jolt the markets, because this is a paradigm change, and this is the reason why I'm so bullish gold and silver, is because when you look at all the factors that play in, why people need to go to gold, we're having a paradigm change and I call it end of era change. So the U.S. has basically been the dominant player since 1945, and has pretty much got the rest of the world to do what they want to do. I mean, you talk about, the G7, the U.S. pretty much from the G7 alone, they've kind of dictated, economic policy globally. And we've never let China into the G7. Isn't that interesting? It used to be the G8 with Russia. We kicked them out in 2014. So Russia and China are both kicked out of the G7, G8. And they basically have made this economic alliance, and they're mobilizing. And I mean, the BRICS are expanding. I mean, that's pretty evident, right? So this is a paradigm change. And if the U.S. was in a dominant position, we're losing that dominance, which is, that's not a good thing. And it creates risk, and that's what creates uncertainty, and that's what gold likes. So you put that in tandem with all the debt printing, all the money printing, the debt bubbles around the world. It's not just the U.S. that has a debt bubble. Europe has one, Japan has one, China has one. You have debt bubbles all over the place. And so all you need is a little bit of weakness in the bond market, and that creates uncertainty. And I think the key to it all is the U.S. economy, because the U.S. is the number one economy globally. And New York City is the financial hub of the world still, but I think that is all starting to shift and transition. My expectation is that the growth in this decade is not going to come from the U.S. It hasn't come from Europe, and it hasn't come from Japan. So now the U.S. is going to join Europe and Japan with basically no growth. So where's the growth going to come from? I think it's going to come from Asia. Mm-hmm. And so if it comes from Asia, that's kind of a shifting, right? So that's where the U.S. loses its basically global reserve. It's going to take a while to unfold, but if it starts to trend away from that, and then if New York City starts moving away from New York City towards Asia as the financial hub of the world, this creates uncertainty, which pushes gold higher and higher. I think, and we haven't started talking about why the U.S. economy is in trouble, but there's a long list of reasons why it's in trouble. I think everybody is paying attention, has to be a little nervous. And I think that's uncertainty. I think that's very beneficial for gold. And this is why I've never been so bullish.
Yeah, you talked about a lot of things in there. I wanted to comment on a couple of them. To your point about the financial issues around the world, new currencies. Yeah, Russia and China have talked about doing a gold-backed currency. They've talked about doing their own version of the SWIFT system. You mentioned Iran and CPAM. And in addition, Europe came out. They've been coming out lately. I think the vice president of the European Central Bank came out with a speech that I got through the BIS a couple of days ago, talking about we need to integrate the commercial loans with the investment side. So think about Glass-Steagall and repeal of Glass-Steagall and what that did here in the U.S. made the banks more risky and put customer deposits at risk. Look at what happened to Signature Bank, Silvergate, even Credit Suisse. Well, Europe is now talking about removing the separation between the commercial deposits and the investment side. And what does that do? It creates the need for bail-in laws. So you can see Europe's going the way that the U.S. went. That seems to me to put more risk into their banking system. And that's not a good thing. And that would definitely be bullish for gold as well, because they already have issues. And if they start integrating, if they use customer money to go buy all this crappy debt that they have, it just means that people, the value of people's bank accounts is not going to be what they think it is. And it'll create more people looking for things like gold and silver, I think. So I think there are a lot of positive catalysts. Why do you suppose this is going to happen this year? And I ask this all my guests because there are different opinions on when stuff is going to happen. Why do you suspect this year is big? I know that they're talking about the new currency, but are there other factors as well?
Right. For me, it really only comes down to one thing, and that's basically the U.S. economy slowing.
Yeah.
So we're starting to see signs of it.
Mm-hmm.
Retail, there's a lot of retail, pressure. Just about all of your retail companies, your Walmarts and your Kohl's and your Targets, all of these retail outlets are all starting to, Home Depots, they're all basically starting to say, we're under pressure here. We're not, this isn't a good year for us. Right. And then you have, in tandem with that, you have high interest rates. So high interest rates, that makes it harder for consumers to spend money. Because if you spend money and you have easy credit, it's easier to buy stuff. And when you got interest rates at 5%, you don't have easy credit. So if you want to buy a house, at 7-8%, you want to buy a car 7-8% right now. That's high. I mean, you buy a car at $40,000 at an 8% interest rate. That's a lot of money annually just in interest alone.
I don't know any normal family that can afford that. And when I was looking at potentially switching off of my truck to a more fuel efficient car, maybe 6 months ago, I said the cost of cars is way more than I'm ever going to pay for gas. It would be like a 10 to 15 year break even period. So I'm like, why would I switch? And
right.
New vehicles are real expensive. So are new houses. And we've started to see that affect housing data, the housing market starting to roll over. So I agree with you. And I think we're headed to an era in which the consumer doesn't have any money to spend. And that's going to make it really hard for that economy to grow. I don't know where we're going to get that positive GDP going forward.
Yeah, I'm in that camp as well. It's like the economy right now is slowing, and there really are no drivers to push it higher. So in other words, to come out of this, we're slowing. And how do we start growing, right? The Fed, now we can start talking about some of the issues, these headwinds, and the reason why I think the economy is going to slow. And once it slows, I think that's when gold basically gets its demand back, if you will. The fear trade comes in. So we talked a little about how interest rates are making it harder for consumers to buy stuff. And then if you look at the banks, the bank crisis that started in March, that crisis did not go away. Those balance sheets did not get cleaned up in 3 months. Those balance sheets are still a mess. So we have a credit contraction. So if that's in place, that means how does the economy start growing? I hear a lot of people on Wall Street, these analysts, and basically they just talk their book and I say they cherry pick the data. And I'm like, you're bullish the market and you say it's, we've entered a bull market as we're up 20%. But where are these drivers to get us from going from a slowing economy to a growing economy? Where are these drivers? I don't see any drivers. In fact, I think it's for me, it's like zero. So you got the consumer, okay, you got employment, right, which isn't going down. I mean, it's not going up. I mean, so we're not getting worse inflation. So the consumer's hanging in there, but they're hanging in by their fingernails. It's not as if the companies are hiring more people. We're just hanging on, right? And so the consumer, and then the consumer is actually having trouble. So the jobs are hanging on. We're not going to add a whole bunch more jobs. We're just kind of hanging on. But jobs is a lagging indicator. You shouldn't be pointing at jobs and saying that we have a bull market, because the jobs, that's the last thing to go. That's the one thing you don't want to use as your storyline of growth. And then if you look at the consumer, how often in the last, say, few months have you read something about the consumers having trouble, right? And they're having trouble because inflation has decreased their earnings power. It's decreased their wealth effect. So Americans have gotten poorer. Americans have less money to pay their bills. They have less discretionary money. And that's not coming back because people are talking about deflation. But true deflation is when costs start dropping. So your grocery bill basically goes back to normal, or your utility bill goes back to normal. Or when I say normal, say back to 2019 levels. These prices aren't going back down, right? And so if they're not going back down, then inflation is effectively made America poorer, the consumer poorer. So now we go back to, how do we stop slowing and start growing? I don't see it anywhere. It's like everything seems to point to a recession. And now if we look at some historical facts, the inverted yield curve. So right now, the 10-year is at 3.7 and the 2-year at 4.7, 1% difference. That's a pretty significant inversion. And this inversion has been going on now for over 6 months. When you get a long inversion like this, you almost always get a recession.
Oh, and not only that, but a big one, because the last time we had one this long, it was before a big crash. So the longer that yield curve inversion goes on, the deeper that recession tends to be. That's the bond. I often say, and it's a great statistic that you quote, I often say bond traders, back when I was cutting my teeth, getting licenses and learning finance when I was younger, I realized the bond traders are smarter than anybody else, because it's not based on hopium. They've got debt covenants that they want companies to adhere to, or sovereigns to adhere to, and they're watching everything. And they're smart. They're some of the smartest investors out there. And when that yield curve inverts, they're basically telling you what's coming. We're going to have a recession.
Right.
And that's your canary in the coal mine.
And so the people that are, basically long the market and bullish the market, they're kind of ignoring that. They're ignoring this, the most important data, the more significant data of what's coming, what's looming. So you have that inversion curve that it stands out. The other thing that's really interesting that points to a recession is bankruptcies are up. Bankruptcies for the year are trending higher than 2008. Now, what in the heck's going on? Well, we know why they're trending higher. It's because interest rates are up and they can't get new credit. And so you can't get new credit, you go bankrupt. But that's a significant indicator that bankruptcies are trending higher. It shows you things are getting worse, and what's going to fix this problem? Now we have another crisis that's looming, and everybody's been screaming about this crisis because we know it's inevitable. I was just reading where the office space right now is only 49% capacity of where it was pre-COVID. 49%. Commercial real estate is going to be a problem, and is not going away, and it's going to impact the banks. And so that's another massive massive indicator that see that type of a crisis that's basically getting worse every day. And so I think that I don't know when what's the economy to slow, what's going to cause, when it's going to happen, when Wall Street's going to throw in the towel. But, my targets remain, fairly low. For instance, I've been saying all year that my expectation is that the S&P goes down somewhere between, we're at 4,300 right now. That's 1,000 points down. So we go down 1,000 points. How does gold not get dragged down with that fear? That fear selling is going to require at least 2 weeks and probably 4 to 6 weeks. It'd be hard to go down 1,000 points in 2 weeks. Very difficult. But 4 to 6 weeks. So we're looking at 4 to 6 weeks of somewhat extreme selling. When does gold get a bid? But I don't see 1,900 holding here. So for me, I look at probabilities. So looking at where's gold once the selling starts. So my thing, 1,900, I think the probability is very, very good that we go below 1,900. And then the next level for me is 1,850. And I think the probability is actually very good we go below that level as well. However, I do think 1,800 is going to hold, and I hope that I'm not, being too optimistic that 1,800 holds. But go ahead and bring up the chart of gold, say the weekly chart for, the last, and you can see where 1,800 has a lot of support. So technically, I think 1,800 will hold. So there you can see it right there. You can see that you draw a line. You can see all the touches right around 100. And so I think 1,800 has a really good chance of holding. I don't think we're going to go back to the low, which is 1,615. I'm not expecting that. So
this would be, Don, if it did hit 1615, I think that'd be a confirmation of a triple top, which is a bearish signal. So if we do see it come like down here, people could say, well, that's a triple top. You tried, breaching 2,000 3 times. It didn't work.
Right.
But I'm with you. I don't think it goes below 1650. I see way too many bull factors in this market. And I think if anything, it stops around here and goes back up. So I'm in pretty much complete agreement with you there.
Yeah, technically it has a good chance of holding 1,800.
Yeah.
So once it holds, and once it holds and it bounces, that's when you're going to get this decoupling of gold in the markets, because the markets will be going lower and gold will be going higher, and we'll be off to the races. That's waiting for that final capitulation. Let's bring up one more chart. Let's bring up the S&P 500, and we can see how we haven't really broken out of this. In order to really break out of the correction, you got to get to 4,800, and if we don't get there, this thing could turn. It could turn at any time, and so.
You're saying it could come. So where could it come down to? Do you think the S&P?
Well, you can see the low is right above 3,500.
Yeah.
So I think we're going to. That's so okay. So if we go to 22 when it started.
Yeah, right here.
December 21. So if you start right there at the top.
Yeah.
That correction. So we bounced off it. But we've had a lot of dead cat bounce
here. Yeah.
There's a lot of dead cat bounces in there. Now, is this another one? I think it is. Now, the only way that technically we could basically says, this is over. It gets above 4,800. And I don't think it's going to. I think it will roll over before then. So now it's a matter of where does it roll over and when does it roll over? Yeah. 4,500, just because of the momentum right now, but maybe not. But and that's like in July. So July, August is when I'm expecting this thing to roll over. But, I mean, it wouldn't be a shocker if we go all the way to October and it's still hanging in here. 4,000 to me is really a critical level. We go below 4,000, you're basically going back into that kind of that sell-off area.
Yeah.
So you get below 4,000 and I bar the door. And then once you get below, and the number I've been looking for, I've been tweeting about is 3,700.
Right here.
Once we get below 3,700, I don't think they'll be able to stop it. In other words, downward momentum will be so significant below 3,700 because then you're looking at a new low. So once you get below 3,700, you're going, oh my goodness, 3,500 is right below us. And then how does 3,500 hold? And then if it doesn't hold, final capitulation sell-off.
Yeah.
Now this is where I basically kind of go off I get a little bit, hyperbolic, is that my feeling is that finishes, it's going to be the end of the U.S. era that started in 1945. In other words, after this bull market, this little bull, 20% is basically the last hurrah, if you will. And then once the selling starts and we go down to say 3,200, I don't think we'll recover from that. I think what's going to happen is liquidity problems, and the liquidity problems are going to start damaging the economy. You got liquidity, basically inflation, stagflation, basically lots of bad things start happening. So, I mean, the way we got out of COVID in 2020, 2021 is we basically printed money and we did a lot of stimmies and we basically injected money into the economy. Well, guess what? We're not going to be able to do that. We won't be able to do that this time, not to the level that will be required, and actually end up backfiring, because they're going to print money, but it's not going to work. This is exactly what happened to Japan in the 1990s, and that's what's going to happen to us. The exact same thing. We will not be able to print our way out of this one, and so since we can't print our way out, we basically are going to hit a wall. And that's going to last for several years. And during that period, risk will be high, money will be pulling out, the de-dollarization will be increasing, which is bad for us. Our relationships around the world will be deteriorating. And it's basically end of era stuff. And I expect a 30 GSR gold silver ratio. So if gold makes it to 3,000, then silver should make it to 100. Most people think that that's, pie in the sky fantasy, but a 30 GSR is not crazy talk. We had a 17 GSR in 1980. Crazy. As a matter of fact, a lot of people were expecting the GSR to go to 20 or lower. Me at 30 is somewhat conservative. What's your expectation on the GSR?
Yeah, if you just look at mined amounts, it's somewhere 12 to 15 to 1, depending on the data you look at in terms of silver to gold. I don't think silver and gold act the same anymore. So the gold silver ratio matters, but I think it matters more in times of crisis. I think in a normal quote unquote market, I don't know if the market's really normal, but the world thinks it is. So when the world thinks the market is normal, it bids silver as a commodity. And so they need to keep that price down because they need it. And so there's price pressure down, I think, on silver to keep that flowing. Gold's different because it's still primarily used as money. But when I see that gold silver ratio make more sense compared to what it was historically, is when silver becomes money again. So as people start investing in silver, that pulls up the price. And I think that's where you're going to get what you are talking about is really a normalization of the gold silver ratio, because we're using silver for more than money right now. So it's, back in the time when gold and silver were really money in America, gold and silver were mostly used as money. We didn't have, complex machinery that used a lot of gold and silver. Now we live in a different age. And so the gold silver ratio, I agree, when people are going to flock to the metals, I think that they're going to bid silver way up. And I don't disagree with you. I think the gold silver ratio could get really tight because if people cannot afford gold, and most people can't. I mean, there was that story out about most people can't afford, a couple of years ago, can't afford $400 emergency bill. So how are they going to buy an ounce of gold? They're going to have to sell something. So I think a lot of people will go to silver first. And I think silver could get pushed up even more. If we have a big crisis event, I think silver could go a lot higher than even maybe it historically was. So I think $100 could potentially be conservative on the silver price even.
Yeah, I personally, when I wrote my book back in 2010, I actually wrote in there that the biggest factor that's going to push gold higher will be shortages, because there just is not a lot of inventory above ground.
That's right.
As a matter of fact, nobody tracks inventory of 1,000-ounce bars. You can't find it. We don't know how many 1,000-ounce bars are actually available for wholesale. And I'm talking about people that actually have it for sale, they're available to buy. So you would think that there's not that many wholesalers that somebody could track it, but there isn't a lot. So last year we had a deficit of around 150 million ounces. It was a little north of that. And then this year they're expecting the same thing. So you're looking at 300 million ounce deficit. That's a lot of silver over the last 2 years. And the investors, the reason why the deficit was so high is because the investors are basically coming in and buying it. And I don't think that the demand from investors has peaked. So I think these deficits could actually get bigger, get wider. And so I'm expecting shortages. And when I say shortages, I'm talking about 1,000-ounce bars where you can't buy them because there isn't any for sale. That's what I consider a shortage. And so all we need, and I think it's going to happen sometime between $35 silver and $50 silver, depending on how fast silver goes from 35 to 50. But somewhere north of 35, I think that investors are going to want to buy silver. It's a strange asset. The reason why they want to buy silver is not really because silver is trending, it's because gold is trending and they can't afford gold. Because if silver is trending, gold is also trending. And they see it on the news and they see gold going through the moon. And, they don't have $2,000 to buy, a 1 ounce coin, but they got $500 to buy a few, silver bars. Sure. And so silver tends to do well when gold is going up. It's like people are, and the reason why people are buying gold is because they're hedging. And the reason why they're buying silver is because they're hedging. And so there's a reason why gold and silver do better when, they're going higher. And so if the investors, and a lot of people don't realize this, but if the internet runs out of like silver bars and you can't find silver bars, it takes like 6 to 9 months to get new inventory in. In other words, once the shortage happens, it's going to linger for a long time before it actually resolves itself, which is going to put an enormous amount of strain on the price. Yes. And I think that is what's going to happen, is that you will not be able to find, a 10-ounce silver bar on the internet. If you can't find a 10-ounce bar on the internet, you can imagine what the price is going to do. Now, the only way that will happen is if you get a shortage, the 1,000-ounce bar shortage. Now, how will that unfold? It'll unfold because a company like Sony or Panasonic or LG will basically throw out a news release and say, we're shutting down this plant because our supplier can't find any silver. And we can't, this component that we need in this electronic device that we make, we can't make them right now because we can't get any silver. One news release, that's all it's going to take, one. And you're going to see a run on silver. And I don't see how that doesn't happen. When you look at, I
agree. And if you look at the nickel market on the LME, you saw what happened there. It went bid vertical, right? And they basically had to stop the trade. We don't have nickel. Well, silver, it might be, Don, I want to get your opinion on this. I think silver is one of the most critical minerals in the world because, like you said, it's used for everything. We couldn't have this conversation without silver. You can't build a car without silver. You certainly can't do any of these green tech without silver. Silver is used in computers and you can't remove silver from our society without very dire consequences, which means people are going to pay whatever price they have to. So if you're a silver investor, I'm sitting there looking at that. It's a different market than gold. Gold's an important market, but silver, really, the dynamic there is completely different. And we cannot survive without silver right now. So whatever price that you need to pay for silver, the industry is going to pay that for silver. And if you're an investor, you're going to benefit from that.
Yeah, the best example is what happened to palladium. Palladium used to always be a very cheap metal. I mean, it was like $50, $100 an ounce. It was, you know, when you compare it to palladium, I mean, it was, you know, relatively cheap compared to gold or platinum. That was what I'm looking for. You compare palladium to platinum or gold, it was always cheap, you know, 100, 150 an ounce. Well, what happened? They had a shortage. They had a shortage of palladium, and palladium has never looked back. After that shortage, it went over $1,000, and it's never come back. Can you bring up the palladium chart and go back to, I don't know, 2000 forward? I forget, it was in the mid 2000s when they had the shortage. But my point is that once the shortage happened, it never went back down. And that's what I think is going to happen to silver, is that it's going to race up to, you know, who knows, 75, north of 75, and it's not going to come back down. So, yeah, so we're like 1,300, but let's go back to when it was 150. So can we go back further? I'd like to, if you can go back to 2000.
I'll find a better chart than this, but you're right. Palladium really got bid up, and it went almost to 3,000. I think it went to like 2,700. Right. And
historically, it was always under 200. So you can see it's up, you know, well over 5x. And so silver, I think, is going to be well up over 5x.
Right. So here we go. Right now, palladium's at 1386. I think at one point it was 2,700. And then, you can see all the way down.
Go to 2004.
Yeah. There you go. 10 or 15
bucks.
Yeah.
Yeah. And it was, if you back off a little, if you go back a little bit, you get down to 150. If you go the other direction, 2003. But 1996, I mean, how much? It was under 100 maybe?
Yeah.
So there
you go. Here's your $150 price in palladium in April.
Yeah, 2000.
Down here it was $110 in 1993.
Yeah, so the 90s it was $100, and now it's, you know, 1380. So that's 10. It basically went up 10x, and a lot of people think silver is going to go up 10x as well. And I think palladium is a good example because, you know, basically once supply went down, it went to the moon.
Yeah, and I graphed out, I just added crude oil here because a lot of palladium is using catalytic converters. So if you look at it in relation to what's going on with crude oil has fallen a lot, but palladium is a little bit more inelastic in price because you have to have it. So all of those government regulations that say you have to have palladium in your catalytic converters is going to keep palladium price up even when oil demand's not quite as high. So I'd like to point out, yes, palladium is an industrial metal, but it's so rare that price isn't really ever going to come back down to where it was before. Because between platinum and palladium, that's the only thing that you have to power all the cars, including EVs, because a lot of EVs also use platinum, palladium, rhodium. So no matter what kind of vehicle we have, you know, as China and India mature, you're going to have this demand for platinum and palladium.
Yeah. And so that's one of the biggest factors, the reasons why I'm bullish on silver is there's just not enough of it. And
so let's turn to the mining stocks for a moment. I'm going to put up a chart of like the GDX and the HUI, but I want you to give me just what's been going on with this market and when do you expect, Don, and I know don't give a date because dates don't really matter. These are markets and markets move when they move. But what are the factors you think they're going to cause the HUI and the GDX to go back up? I know back, you know, when we were getting our all-time highs in gold, we were seeing these really high valuations in the mining stocks. They followed right along. And, you know, we've had a nice little boost here since the pandemic, but it's not really ever reached, you know, gold reached an all-time high here in 2020 and the mining stocks didn't follow.
Well, so you can see what happened in 2013. 2013, basically sentiment died in the miners.
Yeah.
and it has never come back.
Yeah.
And right now, so you got the Huey at 233, and the all-time high is 625. So it's down over 60% from its all-time high, yet gold is near its all-time high. It has to go up 170% just to get back to where it was at. Now, you have a lot of dilution, share dilution in there, but I would submit that the miners are 100% undervalued right now. Even if you include share dilution and inflation, maybe 100,000 is a little aggressive, but we can say 80%, something like that. Mm-hmm. But my target for the Huey is above 1,000, and so we have quite a way to run. But the key to it all is getting the sentiment back, and what's going to get the sentiment back is going to be higher gold and silver prices. So we're going to need we're basically two things. So we need gold to break out. Gold's the big dog because gold is the big market, and silver is going to follow. I call gold big brother and silver little sis, because silver is more of a feminine metal. You can't understand silver, right? It's more like a woman than it is like a man. Man is the gold, more masculine, more stable. And so little sis gold has to break out. And then once gold gets above 2,100, little sis is going to come running, and she's just going to run right past her brother as far as growth, speed. She'll outperform him by 2x or 3x. Yeah. And so when silver runs from, I think the breakout level is going to be 27 or 28 on silver. It's like once we get above those levels, we'll never go back down. And then once we break through 30, then the technicals will kick into gear, and you'll have basically a magnet to 35. Mm-hmm. And then once you get to 35, it's going to be really hard to stop it from going to 50, because there's just not a lot of resistance above 35. Yeah. 35 is like the last little breather. It might stay there a month. And then once it goes 36, 37, it's basically going to be, see you later, I'm out of here. So that's going to flip the trend for the silver miners, because the silver miners are going to be going up 100, 200%. They're going to be going absolutely bonkers. So that should turn the sentiment in the silver miners. Now, and I would think that'll also turn the trend in the gold miners as well. So we need to get above 2,100 in gold. That's the trigger for the whole deal. You get above 2,100, you stay above 2,100. 2075 is a really important level. So once you can relax until gold gets above 2050 and silver gets above 2650. Until then, you just relax. It's all noise. Once we get above those levels, then we can pay attention. Say, okay, we're getting really close here, people. Do we basically go up against this resistance and come back down, or do we bust through? And that's when we start to pay attention. Until then, it's basically all noise. But one thing we can do is we can buy the dip here. So I do Friday night recaps on Twitter, and one of the things I do is I try to identify, the opportunity of the bottom. When's the bottom coming? When is the bottom? What is the bottom? And so for me, I say, okay, wait for the S&P to get to 3,700, and then we'll see how gold reacts. When gold's at when S&P is at 3,700, we're going to have a pretty good idea of what gold wants to do. Does gold want to break down and just blow up, or does it want to get a bid and go higher? So I think we need to be patient for that. But I do think that I always like to buy stocks to the bottom once I think they're close. So a good example is let's say Pan American Silver. I just did an article on Seeking Alpha, and I said, basically you want to buy it at 13. So right now it's a little over 15, right around 15. I said, just be patient. See if you can get it at 13, maybe 13.50. But what I like to do is, once it gets to 13, you buy it, but then you're not done buying. If it goes lower, you keep buying. It goes to 12, goes to 11, it goes to 10. You buy it all the way to the bottom, because you know that 13 is cheap. So if it goes below that, it's just getting cheaper. So, and there are stocks today that you can already buy to the bottom that are just crazy cheap. I did a 20-bagger list yesterday, tweeted it out, and it had 33 names on it. And I have a 10-bagger list that I tweeted out that has 89 names on it. Well, back in 2008, the last time we had, a severe correction like this, the juniors didn't get beat up this badly. What got beat up back in 2008 was more the quality stocks.
Mm-hmm.
You had Pan American trading like $7. First Majestic $1.15, Fortuna, $1.15. You had some quality names that were just completely obliterated. A lot of quality names. But now a lot of the quality names are sticking in there. You look at like Gold Road, some of these Aussie mid-tiers, Gold Road, Capricorn, Bellevue. These stocks are too pricey for me to buy. So some of the quality ones, 𝘎𝑃𝑔, some of the quality names, they're hanging in there. And that shows me that this market knows we're going higher. And people are basically, the quality names are hanging on tight. Snowline, they're not selling selling some of these quality names off. And Pan American at 15, it hasn't really, but once it gets down to 12, yeah, you're getting into that cheapness. So I'm watching some of these Aussie miners to see if they get cheap, but I don't think they're going to, because I think the 𝘎𝑚 is going to hold. It's at 230. I thought it would hold 220, but after today's price action, it's possible we could go down 215, 210, 205, somewhere in there. So you want to, back to my earlier statement, you want to basically buy a stock when it's really cheap and then buy it to the bottom. That to me always makes a lot of sense. That way you end up literally buying the bottom. You're not buying the complete bottom, but you're buying some at the bottom.
Do you think the juniors are the area that you would, because of what you said and how they've been beat up, do you think that's the area that you're going to focus most of your attention on for this coming bull market, or are there other areas, Don, that interest you as well?
Well, there's two answers to that. For me personally, I'm looking for, I already have kind of my foundation, a lot of quality producers, physical silver. So now I'm looking for high upside stocks in this big correction. But if I can get, like a Gold Road on sale or Evolution Mining on sale, I'll buy it, But there are not a lot of mid-tier producers I don't own, but there's some that I don't own that I have my eye on if they get cheap enough. Instead, I'm looking at optionality places, probably, like I did an optionality list and then this 20-bagger list. So I'm looking for stocks where I just know they're just worth a fortune if gold goes, to 3,000, silver goes to 50. These are stocks that are trading. They have a lot of gold in the ground. They have a lot of silver in the ground, and they're trading at, 50 cents or less for silver, or $10 or less for gold. I mean, and they're quality projects, they're just completely beat up. And you've seen these juniors obliterated. So I look for optionality plays and then development projects that are just really, really cheap. I mean, it's kind of crazy. That's why I've been doing these 10-bagger and 20-bagger lists, so people can, go down the list and look at these opportunities and do their own due diligence and say, man, how in the world is this thing so cheap? Now, the key here is you need to be very patient, because a lot of these, the reason why they're so cheap is because it's going to take a while for them to basically be developed or come into production. A lot of them are 3, 4, 5, 6 year investments. I did an article on Go Gold. Well, it's a good 5-year play. How many people want to type their money for 5 years? I mean, you might get a 3-bagger in 3 years, but if you want to get a 10+ bagger, you're going to have to wait, because they have to build 2 mines. So there's a lot of projects out there you have to be very patient with, and development stories are always a crapshoot if you're going to make money or not. Now back to that, to me, I'm looking for, quality producers on sale, development stories on sale, optionality plays on sale. An optionality play can be either a project generator explorer or a development. It could be either one of those. My favorite optionality is development. So you got a development play, they got a whole bunch of gold or silver in the ground, they're super cheap, and they got a path to production. To me, those are like my favorite plays. Okay, so now for everybody else, right? Everybody has a different strategy. Some people are short-term, some people are long-term, some people are more risk-averse than others. You got to determine what your strategy is. Do you want to focus on quality producers, ETFs, royalty plays? There's so many ways to play it. The one piece of advice I would say is be really careful on exploration plays that don't have the goods, because you can't assume that an exploration play is going to turn out well. It's going to have a big project. You just never assume that. But what you can assume is that an optionality play is going to be worth a hell of a lot more at higher prices. Gold isn't, and I'll tell you why. It cost about $50 an ounce to find gold in the ground, at least $50, unless you already have a discovery and you're drilling right next to that hole, then maybe it's less. But if you're trying to find a large mine, it's usually $50, north of $50. And so the pricing is all going to come back around where companies are no longer giving away their project for $10 an ounce. ATAC just gave away their project for $10 an ounce to Hecla. $10 an ounce. I mean, you got to be kidding me. So it was worth $50 an ounce if they were patient. If they would have waited until gold went to 3,000, it was worth $50 an ounce, maybe more. So you're basically buying it, for, if you compare it to what it will be worth at $3,000 gold, I mean, you're looking at 3x, 5x higher just on the optionality plays alone. So you can assume that value, but you can't assume that, a lot of these drill stories are going to be worth a fortune. So I always say that, don't assume it.
Yeah, if there's anything I learned from the geologists going on these site tours, you can have really great geology in an area and then it does not replicate anywhere else, or it may. And trying to find that's extremely difficult. And one of the ways the geologist described it to me, I was out, I believe, at 𝘲𝙗𝑆𝑙A and having this conversation. And he said that we've had so many geological events that even if you felt like you could map out the first one, you've got all these others. And so really it's like searching for a needle in a haystack. So you can see good drill results early on, and then a lot of times these projects will die off for a while.
They are
until they find something.
Yeah, sorry to cut you off, but they are rare. Big quality projects are rare. They don't happen left and right. You get one or two of those a year, and that's it. And you got, I have almost 900 stocks in my database, and of all those guys, I mean, one of them maybe you'll find a quality project. But let's talk a little about 𝘲𝙗𝑆𝑙A. So I was actually, I watched a podcast last night of the CEO, and then did a little bit more. It's really interesting. I mean, you analyze a company and then you can listen to what they have to say and you can kind of connect the dots.
Yes.
Wow. 𝘲𝙗𝑆𝑙A is an outstanding optionality play. Now, what do I mean by that? The optionality is that, okay, it's already 200 million ounces and they're hitting targets. They're hitting wide, high-grade intercepts left and right. So it's growing in size. So we can assume, remember I said you can't always assume, but you can sometimes based on what they're drilling. So they have like 6, 7 discoveries that they're drilling. That's a lot. And so it's getting, and they're getting really successful. This is a really, really nice property, the Pánuco property. He actually threw out a 1 billion ounce target for Pánuco, billion. I mean, that's how confident they are based on the drill results. So they're currently at 200 million. So what do I mean by optionality play? So it's trading at 300 million bucks. How is that optionality? Well, basically what you do is you project into the future and you project what are they going to find. So if we use, they're at 200. So we project out that they're going to find 300 million, which I think is a conservative number. And then we project if they have 300 million, how much are they going to produce a year? Because they're going to be a producer. So I think 10 million is actually very conservative, but I think we can use probably 12 or 15 million ounces of production. Now, this is way down the road. We're talking 5 years down the road. But the optionality, the upside of this, if they add another 100 million ounces and they get to 10, 12 million ounces of production a year, and then you price it at $75 silver, $100 silver, it's super cheap. I mean, as an optionality play. Those are, and remember I said my favorite optionality plays are development stories, and that's what 𝘲𝙗𝑆𝑙A is. And the other thing that's great about it is it really, the share price really hasn't blasted off. I mean, it's at 300 million, but it's trading like $1.15 US.
That's nothing compared to what they potentially have. And I know people bid it based on potential, but in me going out there and also just kind of studying it, they potentially have a really nice mine that they can build there.
Yeah.
And it's in an area where they're going to get full support and they have a good team, and that could really turn out to be a wonderful company.
This really sums up my investing strategy. It's basically looking for opportunities that have big upside, regardless of the length of time you have to wait. A lot of people, they want to return in 1 to 2 years. If you're going to go for, 3, 4, 5 baggers or better, you got to be patient. It doesn't happen overnight. I have no qualms, or I have no problem, waiting, 4 or 5 years for these stocks to pay off. And Vizsla, there's large silver, high grade projects are so rare. They're less than my hand right here. There's less than 5 on the planet. They're super, super rare. And as far as I'm concerned, I want to own all of them, because I know that some of them are just going to be worth a fortune. Some of them will get taken out. Hopefully Vizsla doesn't get taken out. They have enough insiders. They don't have to sell. Worst case, I hope they keep at least 50% of the project. But it looks fantastic. It's one of the better silver projects out there.
Any other names, Don, before we wrap up, that you want to throw out there that you're interested in as far as these mining stocks go? And it could be any part of the market that you're looking at.
Yeah, there's one, so back in 2008-9, I was looking, what are the companies, that look like slam dunks, right? And the one that really stood out to me was First Majestic Silver. It was trading like $1.15. Keith Neumeyer was saying, this is ridiculous. The value of our company is ridiculous. Don't they see what we have? He was telling everybody, it's just flat out ridiculous what it's worth there, right? It went from $1 to $25. Keith was spot on, 25 bagger. So now, okay, what stock right now basically has kind of the same traits that First Majestic has, that basically looks like kind of a slam dunk 25 bagger? To me, it's Avino. So Avino is trading, at $100 million, and they have a pretty good balance sheet. They're making money. But here's the key. They're similar to First Majestic in that they have a lot of silver. They're silver equivalent. And they're projecting growth over the next 5 years, which is kind of the same thing that First Majestic was doing. They were basically targeting, growth. So Avino has 350 million ounces of silver equivalent, and they're valued at like $100 million. So they're going to grow steadily. They're not going to grow overnight. They're going to steadily grow. So they have this big project that they bought from Endeavor Silver that's like 15 miles away. They're going to truck it in, and they're just going to slowly grow. And so, to me, it's just, if we do get to $100 silver in 5 years, and then they reach, their production targets, it definitely has, 20 plus bagger potential. It's similar to the First Majestic back then. But First Majestic, they did their 25 bagger in 2 years. Mm-hmm. It's going to take Avino 5 years to reach theirs. It's a long-termer. It's like Vizsla. And so some of these, there's a lot of these long-termers. Go Gold is another one. It's a long-termer. They got to build 2 mines. Aya, they have to basically drill out their Boumadine, their second mine, and then build that one. So that one's kind of a long-term. So most of these silver plays are long-term. Discovery, they got to build their mine. That's a long-term. All these silver mines are long-term. There isn't any really kind of slam dunk ones. Endeavor's got to build 2 mines. Mm-hmm. Believe it or not, the one company that's really leveraged for if silver went to $50 tomorrow that would totally explode is First Majestic. They've been totally beat up, but they still have the production. And so their free cash flow is going to explode. Another one is 𝘎𝑐𝑗, but 𝘎𝑐𝑗, they got to get their permit issues in place. Fresnillo is another one that I think has huge leverage. Silvercrest will do well. Silvercrest as well. They're ready.
They're developing their mine. I think they've done their first pour too as well, haven't they?
Yeah, they hit their numbers, which I was very concerned that they would go over them. But yeah, Silvercrest, one of the better risk reward, plays, because they don't have high cost. It's hard. It's a lot. It's going to be tough for things to go wrong for them. Mm-hmm. It's like it's kind of a slam dunk type play. So I rank them really high because of the risk reward. But most of these silver plays are long term, which kind of sucks because, silver is we're going to have to be very patient and wait for it. It's really going to take 5 years for all these silver stories to play out. And so, Hecla is one good way to play it.
Yeah.
Also, one last thing, you were going to say something, but Pan American has 2 projects as well in the pipeline, but both of them have to get permitted, and they might not get permitted, but they are in the pipeline for them as well. So we got all these huge silver projects in the pipeline.
But is it going to come in time for the demand? I would say no, because if you've got them in the pipeline, you're at least 5 to 7, sometimes 10 years to actually get that silver production out. And we don't know what the silver production is. Like you said, a bunch of good young companies, but it's like having rookies in football. You don't know which ones are going to turn out to be all-stars. We're still trying to watch them play the game, right?
The irony is that a lot of these small miners are going to do extremely well because, everybody's waiting. We're in the waiting mode for most of these companies, but the companies that actually are producing, that are super cheap are going to really surprise people to the upside.
Do you have any concern, Don, over the laws that Mexico passed related to their mining sector? Some of the stuff they passed was more about money laundering, but within those laws, they talked about what they were going to do with the mining sector. Does that speak to you about them maybe putting some controls on that, or are they just trying to protect their mining sector, or what are they really doing?
Well, they're becoming anti-mining to a large extent. I mean, especially some of the things that they've said. AMLO, what he has said regarding not him directly, but the people that work work for him, have said regarding open pit mining. There's been some really negative statements that have come out of him. So, as investors, we're all worried. Can all of these projects get permitted? We don't know yet. There hasn't been a big open pit mine permitted under him. So until one does get permitted, we have to be concerned. I'm watching some of these projects to see. I mean, we have Los Ricos South. They're trying to permit that one. Global Gold is this year, but it won't get permitted this year, but probably next year. But that's one that's in the pipeline. Then you have one from Minera Alamos that they're going to submit this year and try to get permitted next year. So those are kind of the 2 big ones. If those get permitted, that'll be very positive. As far as the law they passed, they increased the taxes 5%. It wasn't positive, but it wasn't terrible. The permitting issues, they basically said you just need to reapply and everything's grandfathered in. There wasn't really anything, as far as I'm concerned, the bill itself was kind of camouflage, or maybe that's not the right word for it, but it was all about raising that tax 5%. It was like, let's go get 5% for the locals. I mean, and everything else is kind of just fluff. But that overall bill wasn't that bad. It's the next one we have to worry about. So they just increased taxes 5%. Now, if they do it another 5%, now it's starting to bite a little bit.
Yeah, then it requires much higher silver prices for these guys to break even, which could affect their mine decision, their development decisions. So we'll definitely have to pay attention.
The key here is what they're actually doing and what they're saying, and how they're being, like they went after Fortuna and basically made Fortuna actually had to go to court to get their permits. The government was actually wanted to take away their environmental permit on their large high-grade silver mine in Mexico. Yeah. It's resolved, but these are the type of things that investors are concerned about. It's like the government is no longer. What do you mean you're taking away my permit? It's my permit. You can't have it. So there's it's just it's that tone. The tone right now is not good in Mexico, and so we're going to get the new president's going to come in next year, and they're going to have a 6-year term. Hopefully, it's somebody that's moderate. As long as they're moderate, then we're fine. So cross our fingers that the next president is moderate, and then we'll see how the permits come in. So I don't think there's going to be a open pit silver permit issued this year in 23. This is the last year for AMLO. So, under him, nothing. And then next year, we're going to see the next administration, if they basically approve these projects. There's another big one that Agnico Eagle has called San Nicolas, and that one is $1 billion CapEx open pit. So we have 3 pretty good sized projects that are all basically coming to a head next year, and we'll know.
All right, Don, if people are interested in signing up for gold stock data, how do they go about doing that?
Yeah, just come to the website and see the features. And if you own any gold, silver mining stocks, I highly recommend my website. It's a fantastic place to monitor your stocks. Mm-hmm. You can monitor what's happening. You can monitor what I'm saying, the forum, get feedback. It's worth the money. It's a real high quality website, in my opinion. And
it is.
Follow me
and when you put stocks on your favorites list, you guys send out like alerts so that you're not missing things. And that's the number one thing in a portfolio is sometimes you miss stuff. But you guys have a cool alerting service, and you can structure, the website in a way to make it your own experience for the ones that you follow. Yeah, we just upgraded our website and we added an alert service where you can actually have alerts for high and low for any stock in our database, which is fabulous. I think that alone is probably worth the price of admission. Yeah. So yeah, it's nice. And then all the lists that I give, I have like 10 lists in my newsletter. So whatever you're focusing on, whatever's your strategy, I have a list for you, and which just gives you what I call leads. So here's a lead, go check, go do some due diligence on it. I'm trying to provide data for people that already know how, because investing in gold and silver mining stocks is difficult. Mm-hmm. This isn't for people that just want to come in and get a list and invest what I throw on my list or my favorites. And that's not what I create it for. I create it for people that want to do their own due diligence, and here's some data to do it, and not to miss opportunities. For instance, what are all the mid-tier producers in Australia? You in my database, you can search for them. You can put Australia mid-tier, boom, they pop up. It's that easy. Then you can go do your due diligence on all of them. That's just one example. Yeah, and it's the only place you can reliably do it, and that's what I've used your website for years. Awesome. So thank you, Don. I appreciate that. Thank you for coming back on the program. And I think as the market gets more frothy, we definitely want to have you back on to talk about it, because I think there's going to be a lot more interest. We see that every time gold does well and the mining indexes do well, people flood into it. Yeah. Make a note. When the S&P goes below 4,000, have me back on. Okay, we'll do. Awesome. All right. Thank you, Don, so much. We appreciate it. Thank you.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.